Hello, this is Steve Malone with Compass FX. So I hope you're doing well today and you get some good trades. Today I want to take a look at the market through the eyes of the dots method. This is an algorithm that we released back in September 2012. It follows the expansion and contraction of the marketplace and highlights potential targets and entry levels and stop loss levels at the start of a session. So last night, at the Asian Open, I got these levels, and as a matter of fact, these levels have stayed throughout the day. And I just want to point out to you, for those of y'all who have been questioning whether I'm still using dots or not, I am. I've gotten a few emails just saying, hey Dean, I haven't seen you talk about dots in a little while in your videos. And are you still using dots? Absolutely. This is an algorithm that I developed, and it highlights these buy targets, buy entry, and buy stop loss levels, as well as sell entry, sell stop loss, and sell target levels at the start of a session. So what we look to do is we look to follow the trend and look to enter into the marketplace and potentially reach a target level. Now, every day is a little bit differently, but this is synonymous of what happens day after day after day with a lot of the currency pairs that I monitor in my trade room. And if you want more information about that, just send an email to support@compassfx.com and we can get you more information about coming into the dots trade room. But let me highlight this and remind folks that the dots is working continuously. Let me just show you some trade opportunities that we had today. And some folks in my trade room took advantage of some things I want to show you here. The market did make a push to the upside, and keeping it real simple, we want to trade in the direction of the moving averages. Better when both the long-term moving averages and the short-term moving averages are moving the same direction. Well, the market made a push up to the buy entry level, fell back over, but did not hit the buy stop loss, and then continued pushing up to the buy target number 1 level. Fell back a little bit, did not reach all the way back to our entry point. Typically, what I like to do is when the market reaches buy target number 1, take some off, move my stop loss up to the buy entry level, and then see if the market's going to go ahead and push up to that buy target number 2 level. Sure enough, it did. Now, we wouldn't look to trade short coming back because that's against the long-term multiple moving averages, and this is where we sit right now. So a nice trade today of about 28 pips there, less spread, and then a 45 pips if you held in there a bit longer, just following the moving averages. Going over to take a look at the pound CAD. Pound CAD had a pretty strong move up as well today. We saw some weakness in the CAD on some worse than expected housing numbers, and so this kind of made a little bit of a move up, coming across the buy entry level, made a push up to buy target number 1, came back, gave an opportunity to reset and step back into it. So not only did we have an opportunity during the European session, it gave us an opportunity right at the start of the US session, right in there during the US session. So 2 sessions giving you an opportunity to trade this, and again making a nice push up here to 23 pips or 37 pips. Now I am getting some folks asking me, hey, what happens when the market goes above this level? Well, you can stack the levels. That's simply looking at the distance from the entry to the buy target number 2 or the buy target number 1 level, and then stacking that, just adding it to the top. So in this case, from here to here is 37 pips. If we went another 37 pips to the upside, look where the market went to, just almost a pip away from going an additional distance up, just simply stacking it. But I want to show you something else as well. Take a look at the Euro Yen today. Strong movement to the upside today. Here's the Asian session. The market long-term moving averages were rolling over. And coming into the European session, we had a nice setup to the upside. The market pushed up to that buy target number 1 level, almost hit the buy target number 2. Now, we've noticed this downward action in the Euro Yen. We've noticed this congestion, this accumulation, this flattening out of the Euro Yen, and we've seen a bit of rally, especially today. We saw a rally in the Euro and the Euro Yen back to the upside. So when the market really put on a strong rally during the US session, I was a bit surprised by how strong it was. It just kept pushing on up and up and up. And I had one of the traders in my trade room simply ask me, how do you know where this guy is going? Well, one of the things you can do is you can lay the average daily range Pro Calculator on top of the chart. And this highlights weekly levels. And when I apply this to the chart, you can see that the market moved right up to the first extension high, sitting right around that 137.40 level. So a combination of the dots giving you those levels as to where we expect the market to go to if it stays within its range for that session. And if we break beyond that range, then look for the market to work up to an extension level shown on the average daily range calculator. Now, I know many of you listening to me right now already have the dots method and also are using the average daily range pro calculator. Now, if you want to learn more about either one of these, if you don't have them and you're not using them, check them out. Go to www.compassfx.com/dots and you can see a little bit more about dots. You can also see some trading results based upon trading the dots from level to level. Also, you can learn more about the average daily range pro calculator at www.compassfx.com/ADR. Now, I've been talking about both of these since September of 2012, and when you combine them together and look at just price action in the marketplace, which both of these are based upon, you get a sense of direction and you know where to put on a trade and where to take a trade off, whether it's moving in your favor to a potential target or if it moves against you to a stop loss level. So I just wanted to give you a quick look at what the market did today using the dots guppy method. Again, on the pound yen, we had a nice little push up, and even if you were just in here for the buy target number 1, there's about 28 pips right there less spread. And on the pound CAD, making another push up for about 23 pips right there. So we're sitting in the ballpark right around 50 pips just between these two, and this actually gave you a second chance to get in at the open of the US session. And then the euro yen pushing up here to the buy target number 1. And if you were just in during the European session, you're looking at 3 trades for about 65 pips in just those 3 trades. If you held in during the US session, obviously you would have made some additional pips in both the pound CAD and in the euro yen. And these are just 3 of the currency pairs that I watch in the dots trade room. Well, if you want more information about any of this information, check out our website, www.compassfx.com. Want more information about the trade room, just send an email to support@compassfx.com. Well, this is Dean Malone with Compass FX, wishing you a great day. Get some good trades. We'll talk to you next time. Bye-bye.